so China is making new friends. But all is not well within China this week. Chinese stocks recorded their biggest fall since 2008, biggest fall in 14 years. The scale of the losses is best described by this report. The wealthiest people of China lost $72 billion in a day. That's right, a collective loss of $72 billion. Today, the Chinese markets did bounce back. Beijing made an intervention. The top economic policies hours of Roman 11 Jinping issued a statement. They vowed to ensure stability in their markets. The comments were welcomed by investors, but this recovery looks tepid, especially when you consider the last 12 months since 2021 Chinese stocks have lost 75% of the value in the US. 75%. So they are selling in the US market at a 75 discount. That's the extent of the devaluation. China's economic problems are compounding. It began with Beijing's crackdown on tech titans in China. The defaults in China's property sector made it worse, and now two new problems have spooked investors. The first one is China's latest Wuhan virus outbreak. It's simply too big to ignore. Now, nearly 30 million Chinese citizens are under lockdown. 30 million, at least 13 cities, have shut down. This includes the economic hub of Shenzhen. Shenzhen alone accounts for 11% of China's GDP. That's worth close to $2 trillion. Let's put those numbers in context. Shenzhen's GDP is bigger than the GDP of countries like Spain or South Korea. Shutting Shenzhen down means losses in exports. The lockdowns will have a deep impact on the Chinese economy. They threaten about half of China's economy, according to one estimates. Problem number two is Russia's invasion of Ukraine. Beijing is not openly supporting Moscow after the sanctions, but even silent support has repercussions. 2 days ago, investors began dumping Chinese tech stocks. The total lost $2.1 trillion. You heard that right, $2.1 trillion worth of losses. What was the reason behind this mass sell-off? It was a report we told you about it. Russia had asked for China's military assistance. Russia wanted Chinese military equipment. It also asked for additional economic assistance. Just this request led to a sell-off of $2.1 trillion. That's how markets work. Reports say the investors are worried. They fear if Beijing helps Moscow, Chinese firms would be sanctioned next. And this is a legitimate concern, as the US is making all of those threats. The White House says if China backs Russia militarily in Ukraine, there will be consequences. Looks like Beijing got the message. Yesterday, China's foreign minister issued a statement. He said China wants to avoid being impacted by US sanctions. That's wonky for you. Beijing is also distancing itself from recent reports. It denied the claim that Russia approached China for weapons, and it labeled these claims as disinformation. So for the moment, panic in the Chinese market has been contained. But on the economic front, Roman 11 Jinping keeps stumbling from one crisis to another. As long as that's the case, the Chinese economy will struggle to bounce back.